We also have Hemang Jani joining us on the show. Hemang, there are flashes for you on the screen talking about how there's a large deal in Airtel, and that stock has been doing quite well for itself of late. Yesterday as well, in a weak market, that managed to hold out quite okay. What's your view on the telecom sector and Airtel specifically?
Yeah, good morning. So clearly, the performance, this quarter has been good. We've had Mr. Sunil Bharti Mittal giving some idea about the possible R2, and the entire 5G rollout. The investment is largely behind. So we do have a view, and we think that the R2 growth story, along with the leverage, will kick in a big way. Idea, we've been hearing about the capital infusion, but one doesn't really know the timing, and the market share gains for the incumbents will continue to play out. So Airtel surely would be a stock that one really want to have as a part of the core portfolio, even at this point of time.
Sanjeev, we've talked about your buy list. Let's also talk about sells if there are any within the mid and the small caps where either you think one should completely avoid. Okay, Sanjeev is not there with us. We'll pick up this conversation with him later in the day. But Hemang, wanted your thoughts in on the small and mid cap correction. I was just looking at, week to date, this week's data, and small caps have fallen quite hard actually. We've not realized that, but it's an over 3% fall that you've seen on the small cap index alone. Would you say profit take? Is that the clear messaging when it comes to small and mid caps?
Aisha, when we look at the broader market, the mid caps and the small caps, the universe is too wide. While at the index level, we do feel that the valuations are stretched, and what market is probably not factoring in is the regulatory action, the corporate governance issues that many of these companies are grappling with. So while we are all enjoying this mid cap party, you will go through periods of sharp corrections and it would surely make sense to kind of take some money off the table and take advantage of the sectoral rotation, from let's say mid caps to large caps, and within large caps now banks are catching up. You're going through a bit of a lull when it comes to many other pockets, particularly commodities, PSUs, etc. So I think it's a good time to kind of relook at the portfolio composition and do that exercise while we are approaching March end.
Everybody, I guess, will be doing that exercise because of the year change as well. But Hemang, what's your view on manufacturing and defense manufacturing at that? HAL today announced that they have upped the overall order value of one of the big orders as well. There was a UBS upgrade in terms of the target price for Bharat Electronics as well. What names in defense still look like in the buy zone?
Yes, I think the good news in terms of order inflows continues, and some companies will continue to basically report very strong growth. Though the stocks have re-rated, they've really gone up big time in the last 1 year. But I think it would be good to have some exposure to the names like Bharat Electronics, HAL, Bharat Dynamics. I only feel that we should not become too greedy and have too many stocks and defense also in the portfolio just because the sector has done so well. So have a meaningful exposure, let's say about 5 to 8%, and have one or two good names. I think that would be a sensible strategy to have.
Right, okay, that's the take coming in right now on what exactly to do with the entire defense pack. Let's just take stock of what else was happening in trade yesterday. And you did see some of the pharmaceutical names as well make a comeback. Sun Pharma definitely was holding out well. In bits and starts, technology, some of the FMCG names like Britannia as well did their bit. There was a Titan as well, which was also shining bright. And then L&T too, after I think 2 or 3 days of a bit of a rest, finally made a comeback and held out by about almost 1%. And autos, of course, were charged up quite a fair bit. Bajaj Auto, we've been talking about that. And on record, Mr. Bajaj has been saying that actually it's 12,000, which he finds is the fair value for their stock. Clear enough, Bajaj Auto is in quite a hurry to actually make it to that mark. But Hemang, wanted your thoughts in on the entire two-wheeler pack right now. And would you still stick your bets with TVS, wherein the performance has been has been proven. It's a proven track record, although the stock has done very well in the last year and a half.
So yeah, I mean, the two-wheeler space in the last 6 months has done pretty well. Whether you look at the stock price performance, whether you look at the management outlook, or in terms of the monthly numbers, I think we continue to see the traction, and I think it may well continue. I think in terms of valuations, Hero Motor looks far more attractive versus a Bajaj or a TVS at this point of time. Also, we have to reckon that when the two-wheeler space is going so well, some of the auto ancillary companies, particularly two-wheeler focused auto ancillary companies, would also stand to benefit. So something like an endurance technology, is something that we should definitely, watch out for. Overall, I do think that valuations are not out of whack. So definitely have some exposure to the two-wheeler companies.
Taken. So that's the stock that was in focus yesterday was Varun Beverages. These stocks have been doing quite well. Hemang, do you track either of these names closely and any view on Pidilite Varun Beverages?
Beverages has been under coverage, positive view there. The valuations are not by our side, let's say about 60, 62 times. But what we have to understand that how many companies in India where you will have a volume growth in excess of 15 to 18%, EBITDA margins more than 15%, and earnings growth of more than 30%. So within midcap, though valuations are higher, even the growth visibility and the track record, I do think that the Varun Beverages will keep on performing even, let's say, from current valuations and price points. When it comes to Pidilite, it's been one of the blue chip names. My only concern over here is that earnings growth, less than 15%, while valuations in excess of 55%, 55 times. I don't think, the market is kind of going to give that kind of, credibility or comfort to the investors when you're trying to invest at this point. Yes, it's been a great, company in trying to expand portfolio, but valuations wise, I'm not comfortable entering into it.
On this underperformance that we're seeing within the broader markets, do you believe that it is only likely to continue?
Yes, I think the underperformance is likely to continue within the broader market. You will have some pockets which will kind of hold out, but at a broader level, it looks difficult given the fact that the valuation comfort and the new money which is coming into the market, they will find large caps in certain pockets within large caps like banks far more attractive versus the broader market. We also had this regulatory issue. We also have to reckon that the broader market, some companies are having corporate governance issues also. So it makes more sense to kind of have slightly overweight position in terms of the large cap.
Hemang, on that note, we let you go. Thanks so much for making time and speaking with us today. But let's